Hello everyone, this is Victor here. Welcome to my YouTube channel today. In today's video, I am going to talk about Netflix recent third quarter's earnings release that happened on October 20th, 2020. I am going to talk about why the stock dropped as much as 6% after the earnings release and why the subscriber growth slowed in quarter 3 this year, as well as whether or not you should invest in Netflix after the stock dropped 6%. So throughout this video, I am also going to talk about whether or not Netflix will still have growth potential for years to come, as well as some of the risks if you decide to invest in Netflix. If you like this video, please subscribe and hit the like button. I will make many great videos about stock investing and personal finance that will help you become a great investor. So what was the main reason that Netflix stock dropped as much as 6% after the earnings release? The biggest reason was that Netflix subscriber growth did not meet the expectation or did not meet their own forecast. Netflix initially forecasted that it would add 2.5 million paid subscribers in the third quarter this year, but Netflix only added 2.2 million paid subscribers in the third quarter this year. Let me read this letter to you. It's from Netflix management. As we expected, growth has slowed with 2.2 million paid net adds in quarter 3 versus 6.8 million in quarter 3 2019. We think this is primarily due to our record first half results and the pull-forward effect we described in our April and July letters. In the first 9 months of 2020, we added 28.1 million paid members, which exceeds the 27.8 million that we added for all of 2019. Basically, it means that Netflix added a lot more paid subscribers in the first 9 months this year, and because of that, Netflix management did expect that the company's additional paid subscribers for the remaining quarters throughout this year in Q3 as well as Q4 would slow down. That was already within their expectation. But however, it was extremely hard for management to be able to forecast accurately as well as to meet their own forecasts for each quarter. Now let's look at Netflix third quarter financial. First, in terms of revenue, Netflix reported 6.4 billion revenue, representing 22.7% year-over-year growth. I think that is quite good because Netflix already added a large number of paid subscribers in the first 6 months or in the first 2 quarters. This is what we call the pull-forward effect. Second, Netflix added 2.2 million paid subscribers in the third quarter this year compared to Netflix's own forecast, 2.5 million additional subscribers. Now, I understand that Netflix did not meet their own forecast, and that was the biggest reason that the stock dropped as much as 6%. But I think 2.2 million additional paid subscribers is still fairly good. This means that Netflix already have 195 million paid subscribers by the end of third quarter this year. Now let's talk about net cash provided by operating activities. Netflix reported $1.264 billion in net cash provided by operating activities, as well as $1.145 billion in free cash flow. This is very important information because free cash flow actually tells you how much Netflix is able to generate free cash flow after Netflix reinvests the capital into their business. I think this is a good trend. Even the management expects that going forward, as the company adds more and more paid subscribers, eventually the company will have very consistent free cash flow. This is a very important metric for us to look at. Fourth, in terms of streaming content obligation, it's still sitting at $19.1 billion in the third quarter this year. This number is quite important because it represents Netflix's commitment to producing more or licensing more content in the future. That will eventually become content cost or content expenses that will be reflected in Netflix income statements later on in other quarters. Now I want to talk about Netflix subscriber growth between 2016 and 2020. So we will know how often Netflix tend to be able to beat its own forecast or underperform its own forecast or be able to meet its own forecast. Basically, when Netflix is able to beat its own forecast by a large margin, the stock always goes up by quite a lot after the earnings release. Or if the Netflix cannot meet its own forecast, Netflix share often drop by quite a lot, maybe between 5 to even 10%. if it cannot meet its own forecast. That's what happened to the stock recently when it couldn't meet its own forecast, and that was why the stock dropped as much as 6%. Let's look at this forecast versus actual subscriber growth chart right here. If you look at each quarter, you can see that every year Netflix always have 1 or 2 quarters where the company cannot meet its own forecast. It's represented by the red squares right here. You can see that in 2016, you have 1 quarter that did not meet the forecast. In 2017, you also had 1 quarter that the company could not meet its own forecast. In 2018, same thing. In 2019, the company had 2 quarters that they were not able to meet its own forecast. And also in 2020, in Q3, the company could not meet its own forecast. If we look at the green squares represent the actual subscriber growth for each quarter. In 2020, in Q1 and Q2, you see that the actual subscriber growth were much higher than the forecast, and as a result, Netflix stock price increased by quite a lot when it was able to beat its own forecast by a large margin. You may wonder, when is the best time to invest in Netflix or any other public traded companies? The best time to invest in Netflix or any other public traded companies is when the share price drops a lot, because you'll be able to buy the company share at a discounted price. If we look at Netflix past 5 years stock price chart, you can see that there were many occasions where we could buy the share at a discounted price. It's represented by all these red arrows here. And if we look at Netflix past 1 year's share price chart, you can also see that there were several occasions we could buy Netflix shares at a discounted price. Full disclosure, I did buy several Netflix shares a couple days ago when Netflix released its third quarter's earnings report, and that was when the stock price dropped as much as 6%. I did invest a couple $1,000s in Netflix, not a lot. That only represents less than 1% of my entire stock portfolio. Now I want to talk about Netflix Q4 forecast. Netflix management is expecting that the company will add approximately 6 million additional paid subscribers to the fourth quarter this year. This means that if Netflix achieves 6 million paid subscribers this year, Netflix will have a total of approximately 200 million paid subscribers. I cannot predict whether Netflix will be able to meet its own forecast or be able to exceed its forecast. I think if Netflix is able to meet its own forecast, that's great. If Netflix cannot meet its own forecast of adding 6 million paid subscribers in the fourth quarter this year, the stock will drop even more. And if that is the case, my plan is to buy more Netflix shares. However, if Netflix is able to exceed its own forecast of adding 6 million paid subscribers this year in the fourth quarter this year, that will also be great. If that's the case, the stock price will likely go up by quite a lot. In terms of future growth, I think Netflix still has many growth opportunities, especially in other regions, in other countries. For example, if we look at the table right here, we can see that United States and Canada, the market is quite mature when we look at the growth rate. And if we look at the paid memberships as well as the paid net additions. But if we look at Europe, Middle East and Africa region, we can see the growth is higher than the United States and Canada region. Also, if we look at the Latin America region, we can also see the paid members and the paid net additions growth are also higher than the United States and Canada region. The biggest opportunity I see is the Asia Pacific region. We can see the growth rate is also much higher than the United States and the Canada region. I personally think Netflix is already mature in the North America region, but Netflix has a lot of growth potential in other regions, especially Asia Pacific, Latin America, Europe, Middle East and Africa, because all these regions have a much larger population than North America. And Netflix is not fully penetrated in these countries and regions yet. When it comes to investing, it's also very important to look at the risk before we invest in any companies or invest in any stocks. For Netflix, the biggest risk I see is its competition. Netflix's biggest competitors include Amazon Prime Video, Apple TV, Disney Plus, and HBO Max. Personally, I think Netflix makes the best content compared to all other competitors. Netflix may not have the most TV shows or the most movies right now, but compared to all other competitors, its content quality tend to be up there. And I believe that as long as Netflix is continually investing in original content and acquiring licenses to stream all other movies and TV shows, Netflix will continue to be the #1 TV streaming service in the world for many years to come. You may wonder, should you buy Netflix shares? Personally, I will continue to buy more Netflix shares whenever I see the stock price drops by quite a lot. Maybe whenever I see the stock price drops 5% to 10%, then I will buy more shares. This is because I believe Netflix will still have many years to grow its subscriber base as well as its revenue. Before you invest in any companies or any stocks such as Netflix, I strongly recommend you to do your own research first, understand what you invest in, understand the potential risk, and understand the company's future prospects first before you decide to invest in anything. And always invest only with the money you don't need to use. In conclusion, I will continue to invest in Netflix shares whenever I see the stock price drops by quite a lot, because Netflix tends to have 1 quarter or 2 quarters every year where the company cannot meet its own forecast. And that is when we see the stock price drops by maybe 5% or even over 10% after they release their earnings. If you like this video, remember to hit the like button and subscribe. I will make many great videos about stock investing and personal finance that will help you become a great investor. This is Victor from the Intelligent Investors channel. Thank you everyone.